let's say that we got a payment from customer number one. If I go into the receive payment form, then there's a receive payment. Notice it's connecting automatically to the invoice. That's what a receive payment means. A receive payment form means that cash is going to go up in some way, but it might not be going into the checking account. It might be going into, as is here, the undeposited funds. And the other side is going to go into, is going to decrease the accounts receivable. So really, this receive payment forms means that accounts receivable is going down. That's what it basically means. And the other side is going to go into some kind of payment that we got, some kind of cash, which will be, again, checking account or this clearing account. So here's the invoice. I can actually connect to the invoice. If I go into it, there's the actual invoice, so I can check it out. I can close it out. If I had, let's go back into this and then receive payment. And so there is that. Now, the other way I can go into this receive payment is I might close this out, and I could just go into the plus button and go in invoice. Next step is to receive payment. Now, if that's the case, once I type in the customer number one is who gave us the payment, then you're going to see the invoice populate down below. Let's tab through it. Now, we could say, let's say, now again, this up top is going to take you into options for receiving payments online and whatnot. And remember, you can look into setting those options up, and you got to think about what's going to be the cost of setting those options up. Do I want to use a checking account within QuickBooks, which might allow me to link, but I have to use QuickBooks checking? Do I want to set up a credit card, but then you're going to have fees possibly from the credit card company, and then, some other types of electronic transfers and so on, or the good old school check or send me a payment, right? So let's say this happened on 1/7, and then you could have the payment method. So cash, check, so on. Let's just say a check for this point. And then now here we could put it into undeposited funds. I'm going to start by saying, what if we just put it into the checking account? That would be the easiest thing to do, to just deposit it into the checking account, select the invoice, which will record the payment, noting that if they only gave me out like $100, I assign it to the payment, then there would still be an amount still due on this invoice of $100 still, right? So let's say they pay us the full $200. If I put it directly into the checking account, that will make it easier because I don't have to put it into an undeposited funds account. There's some pros and cons to that still, however. Remember that, or note that if I record this form into the checking account, it's not a deposit form. So that means that the checking account is going to have increases that won't simply only be deposits and possibly transfers, but also the receive payment form. That's a little bit of an added kind of problem for sorting, which is one reason you might still want to put it through undeposited funds, so that all increases to the checking account will basically be deposit forms or possibly transfers. The other thing that becomes an issue is that what if you're in a situation where sometimes you get checks that will match exactly to the invoice and they won't be grouped together like credit card payments or cash, but sometimes you do also use credit card payments and cash, which will be grouped together, and therefore you're going to have to use this clearing account, right? In that case, you might always want to use the clearing account because that's just going to be the normal process. In other words, it's going to mess you up probably if you have to use the checking account on the receive payment form sometimes, and then sometimes you use the clearing account. If you have to use the clearing account, you probably want to use the clearing account all the time, as it's just your normal process. Okay, but let's put it in the checking account now just to check it out. Save it and close it. What happens if I go to my balance sheet now and I run it to refresh it? We can go into the checking account. So in 2025, and there is our payment form. Notice it's an increase to the checking account with a payment form, other than it's not a deposit form. So if I go into it, I can see there it is. All right, let's close that out. The other side, if I go back, is going to be not on the income statement because we already recorded revenue when we made the invoice. The other side here is in accounts receivable. Accounts receivable is going to be going down. So we see the invoice happened and then the payment. That's the full thing, the two forms that are always going to be in accounts receivable. All right, let's go back. Let's go to the first tab. We need a subledger for accounts receivable tracking it. That's going to be in the detail in the first tab. You can see now that we got a payment, right? So now you've got the original invoice is now marked off as paid. If I go into that invoice, I can see the detail this way too, where it gives you this little track record. If I edit the invoice and go into the invoice, it says paid. It gives me a nice link to the actual payment, so I can link to the payment. Here it is. I can link to the payment here. There it is. And then, of course, I see my invoice here. I can link back to the invoice this way. Or I can close out of this and I can see the payment. Here's the payment. The payment is closed, meaning it's not a credit. Some people would be a credit that would be applied to other invoices. The whole payment has already been applied out. If I go into it, you see the information here. If I go into that, we could see the invoice that has been applied out. So that is great. I'm going to close that back out. We can also search our invoices here. The invoice is no longer open. The invoice would be deposited. It's been closed and deposited here would be the idea. So there it is, boom, boom. And there it is. And you can also search in the all sales. I can search by the invoice, but I already saw that over there. I can also search for the received payment, which is the money received. Now notice QuickBooks, for some reason with this form, they call it different names, right? So like here it is, it's a payment form in the type, and under here they call it money received. And then if you go actually into the form and edit the form, they call it a received payment. So that's a little bit confusion. It would be nice if the name was consistent all the way through, but you know, that's the idea. All right.